what's happening within Russia. And this is where Russia is kind of repositioning their thought around crypto.
Russia has unleashed a claim that could shake the foundations of the global financial system.
America is trying to change the rules in the gold and cryptocurrency markets.
That the United States is plotting to dump its staggering $37 trillion debt burden through a massive crypto reset. The allegation, dripping with the kind of geopolitical theater that echoes Cold War rhetoric, taps into both legitimate anxieties about America's ballooning debt and the still murky future of cryptocurrency as a potential financial escape hatch. To understand the gravity of this claim, one has to weave together the threads of debt politics, digital currency intrigue, and the larger chess match between Washington and Moscow. The U.S. debt is no secret. Year after year, it climbs higher, crossing the $37 trillion mark with little sign of slowing. Critics call it unsustainable. Defenders argue that the dollar's dominance in global trade allows Washington to carry debt levels that would crush any other economy. But Russia's latest claim reframes this ballooning debt not as a problem to be solved gradually, but as something the U.S. might actively try to offload in one fell swoop. The method? A global financial reset, using the tools of cryptocurrency to shuffle the ledger books, rewrite obligations, and effectively neutralize trillions that otherwise weigh heavily on the system. At first glance, such a scheme sounds outlandish, but that is precisely why it resonates. The 2008 financial crisis showed how deeply engineered the global banking system is and how quickly panic can spread when trust breaks down. In recent years, cryptocurrency has moved from fringe experiment to mainstream asset class, with governments, corporations, and hedge funds all dipping into Bitcoin, Ethereum, and a range of digital assets. For those suspicious of U.S. intentions, crypto looks like the perfect vehicle for both innovation and deception. From Russia's perspective, accusing Washington of plotting a crypto reset is not just propaganda. It's a way to preemptively shape the narrative. Moscow wants to paint the U.S. as desperate and reckless, willing to gamble with the stability of the entire planet to escape its own obligations. By suggesting America is preparing to reset its debt in digital form, Russia taps into a deep well of global distrust. Many nations already resent how the dollar system allows Washington to borrow endlessly, impose sanctions at will, and dictate the pace of international finance. A crypto reset, if real, would look like the ultimate abuse of power, erasing debt through a technological trick while leaving others to pick up the pieces. Yet one must ask, what would such a reset even look like? The mechanics remain vague. Some speculate it could involve introducing a central bank digital currency, CBDC, tied to the Federal Reserve, designed to replace traditional treasury bonds with tokenized instruments. In this scenario, old debt could be exchanged for new crypto-based obligations under redefined rules. Others imagine a coordinated system reboot, where dollar liabilities are converted, discounted, or restructured under the guise of innovation. By migrating into blockchain frameworks, the government could in theory control the supply, flow, and redemption terms of digital debt instruments in ways that paper-based systems could never allow. For conspiracy theorists, the crypto reset narrative fits perfectly with ongoing conversations about central bank digital currencies worldwide. China has already rolled out its digital yuan in pilot programs. Europe is studying the digital euro. Even smaller nations like Nigeria have experimented with CBDCs. The US, however, has lagged behind partly because of the dollar's existing dominance. But what if that delay isn't negligence? What if Washington has been quietly planning a seismic rollout? One that won't just introduce a digital dollar, but also rewrite $37 trillion worth of liabilities in the process. From Moscow's perspective, exposing such a plan is also strategic. Russia, battered by sanctions, has pivoted heavily toward alternative payment systems. It has deepened ties with China's financial networks, encouraged the use of rubles and yuan in energy deals, and even explored cryptocurrency workarounds. By painting the US as scheming to unleash a debt-dodging crypto reset, Russia strengthens its own argument for why the world must de-dollarize. The claim becomes both a warning and a recruiting pitch. Join us in building a financial order not dominated by Washington's manipulation. Of course, skeptics argue that the allegation is little more than a smokescreen. Russia itself has experimented with crypto-based sanctions evasion. By accusing the U.S. of plotting a crypto reset, Moscow may be projecting its own playbook outward, shifting attention away from its financial maneuvering. But in geopolitics, perception is as powerful as reality. Once the idea of a crypto reset enters the discourse, it can fuel distrust, market volatility, and suspicion toward U.S. policy moves. The context of timing also matters. Global markets are jittery. Inflation has eroded purchasing power across multiple economies. Central banks are torn between raising rates to tame inflation and keeping liquidity flowing to prevent recession. Meanwhile, the U.S. presidential race looms, with both major parties facing questions about fiscal responsibility. Against this backdrop, Russia's claim that Washington is preparing to use crypto to escape its debt resonates not just as propaganda, but as a storyline that investors, analysts, and rival governments might actually entertain. Consider, too, the symbolic power of cryptocurrency itself. Since its creation, Bitcoin has been hailed as digital gold, a hedge against reckless government spending and monetary manipulation. What better irony than the U.S. government co-opting this very technology to manipulate the system at the highest level? If America were to embrace a crypto reset, it would confirm the darkest suspicions of Bitcoin purists, that states can and will seize the tools of decentralization to centralize power even further. But could such a move really erase debt? The blunt truth is that debt is not just numbers on a ledger, it is promises, contracts, and trust. If the U.S. tried to reset $37 trillion in obligations, global investors would not simply shrug and accept the new rules. Confidence in the dollar would evaporate. Allies holding U.S. bonds would revolt. Markets would spiral into chaos. This is why many economists dismiss the Russian claim as implausible. The cost of attempting a crypto reset would be higher than the debt itself. And yet history offers sobering reminders. Nations have defaulted before, often under the guise of reforms. Argentina has done it multiple times. The Soviet Union itself collapsed and left behind a trail of unpaid obligations. Even the U.S. in 1971 effectively defaulted when President Richard Nixon closed the gold window, ending the Bretton Woods system and severing the dollar's convertibility to gold. That too was described as a reset, and it too shocked the world while ultimately preserving U.S. dominance in a new form. Could a crypto reset be the Nixon shock of the 21st century? That is the chilling implication of Russia's claim. A digital maneuver that looks like innovation, but feels like betrayal. A step that discards old rules while ensuring U.S. dominance in whatever system comes next. If framed that way, the idea becomes less absurd and more unsettling. For ordinary people, the very concept is frightening. If the U.S. reset its debt using crypto mechanisms, the ripple effects would slam into savings, pensions, and global markets. Exchange rates would swing wildly. Nations dependent on dollar reserves would see their balance sheets upended. Ordinary citizens might watch their wealth evaporate overnight as trust in the dollar system collapsed. And in a cruel twist, the very crypto assets touted as liberation tools might be co-opted into instruments of state power. This is why Russia's allegation, whether true or not, resonates so powerfully. It speaks to anxieties already bubbling beneath the surface. That debt is unsustainable, that governments are manipulating money, that digital technologies can be turned against the people rather than for them. Even if Washington has no such plan, the fact that the claim is believable shows how brittle trust in the system has become. Some analysts argue the allegation is part of Russia's broader information warfare campaign. By seeding doubt about U.S. debt, Moscow can pressure bond markets, weaken investor confidence, and stoke division among allies. Even whispers of a crypto reset could make foreign creditors, from Japan to Saudi Arabia, think twice about holding U.S. treasuries. That hesitation alone could raise borrowing costs, strain fiscal policy, and create political headaches in Washington. But there is another possibility, more subtle and more dangerous. What if the U.S. is not explicitly plotting a crypto reset, but is quietly preparing tools that could enable one if needed? Central bank digital currency research is accelerating. Tokenization of assets is becoming mainstream. Fintech innovations are blurring the line between traditional debt instruments and blockchain-based contracts. Perhaps Washington is not planning a debt erasure today, but keeping the option open for tomorrow. And in geopolitics, the perception of intent can be just as destabilizing as intent itself.